The position management one for this one, if you already have units on, is I would wait for a sell-off in one and a rally in another, depending on your time frame. I'm waiting for, honestly, for a long-term move, a longer hold to reverse. Let's say, for example, what's happened during the past 6 months, or reverse the price dislocation that has happened during the past year or so, which has been substantial. So that's all. I want to ride this thing as it has done historically. And here's our spread, NQ versus RTY throughout the whole entire year. And the Russell future didn't actually start trading. I think it was trading on ICE before, the ICE exchange, which you have to pay for to get their data. Doesn't have much liquidity. But this future contract, the Russell CME, was transferred over to CME, and it started trading sometime in 2017 or 2018, I believe. So that's why we don't have data that goes prior to. I'm just going to look at all the data that's available for this spread. This is all the data available for the spread. Do you want to look at the butterfly, for example? That would be another way to manage it, and that you may consider, is turning it into a butterfly. And let's turn that butterfly on. I just want the Russell butterfly and the NQ fly. NQ fly and Russell fly. There are some butterflies that we can chart before the Russell started trading, I believe. This is 2 years worth of data. Let's, for example, look at the NASDAQ butterfly. This is right here at right before the end of 2018, right before the big sell-off. The NQ fly, for example, was at 44 grand. The Russell, the NQ versus Russell. Let me draw it out for you. That right there, that's the butterfly. And then the spread, okay, 12,000. So it was probably right, yeah, it was this guy. So here we have the other. So this was the spread, and this was the NQ butterfly. You want to take a guess at what the Russell butterfly was? Can anybody take a guess at if this was the NASDAQ butterfly? This is the NASDAQ versus Russell. Where would the Russell butterfly be? At a loss. You're correct. This is very similar to bonds, and let's go through it, so we can understand why that's the case. Right here on my screen, what I've just circled, 3NQ minus YM plus ES plus RTY. Today, the butterfly itself has moved $222. So do you see here where it says 64,000? So this yellow line, okay, that label represents this spread. And this spread is 3 Russell minus YM plus NQ plus ES. So it's in a way, a mirror or a reverse of the NASDAQ butterfly. But is it really? There's a difference. At first I thought that they would be identical, but they're not identical. Even though they're trading the same amount of products, you know, the 3 NASDAQs or 3 Russells versus 3 of the other index products. Both of them are doing the same exact thing, but they're not the same. They're not inverse images of each other. And that's when the spreads come into play. For example, what was the difference between NASDAQ and YM, the Dow, versus what was the difference between NASDAQ and ES, for example? Apollo treats the equity spreads with RTY as 1-to-1 instead of JR's 2-to-1. Can you comment on that? I just simply plot them as a 1-to-1. But as I've mentioned a few times, the margin requirement alone hints at a 2-to-1 for it to actually be risk neutral or delta neutral, if you will. In order for the exchange to even give you a margin discount, a good margin discount, they would most likely require it be a 2-to-1 or a 3-to-2 or something like that. We see that all the time with the bond spreads. So, and even as a 2-to-1, even then it wouldn't be enough. NASDAQ would still outperform 2 Russells, and it has before during these past 2 years, pretty much since that the Russell index started trading at CME. Let me change this to, instead of 2 years, it gives us, I don't know, like 5 years. And some of the Russell spreads are not going to be active, but the others will. And let's turn them on.